I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Wednesday, May 19th. We saw a lot of volatility in the grain markets at the back half of last week, and we've seen that volatility kind of linger around here in the first half of this week's trade. Grain markets were sharply lower here this morning, but they made a pretty strong comeback here this afternoon, specifically that corn market finishing nearly 25 cents off the low. So without further ado, we'll kick things off with the corn chart. Here is what we've been talking about in our daily Grain Express. We've got this support pocket that was previous resistance that now becomes support that was tested and held on Monday. And now we could potentially rally back into this pocket here, potentially setting up for a bearish head and shoulders pattern if we fail to get out above here. Now we do have options expiration on Friday, so potentially that plays a little bit of a role in price action here in the back half of the week. But again, looking up towards this 680 level, if we fail to get out above there, we'll probably be looking at the short side, not only for speculative traders, but also for producers who are looking to get some hedges back on as well. If we get out above there, then that probably negates this bearish head and shoulders that we're talking about, and we could potentially revisit the contract highs or at least make another attempt at retracing this breakdown point from last week. Now, as far as the wheat market goes, fairly similar. In this morning's commentary, we wrote that the market's broken first support this morning, 690 3/4 to 692, which has opened the door for a run at our more significant support pocket, 674 1/4 to 680. This pocket represents previously important price points, including the breakout point from April 22nd. If you have been short the market, this would be a spot to consider reducing or buying back those positions. So we did retrace that breakdown point, and we closed a little bit off of that, which is encouraging. And as with corn, we wouldn't be surprised to see maybe a little bit more relief come into the market, but this is going to be the resistance pocket to keep a very close eye on. If we can't achieve consecutive closes out above here or a conviction close out above here, it's just going to be a relief rally that'll probably get sold into. So this is what we're looking for, run back towards that 610, 615 area, and that'll be the inflection point going forward to break out above there. Probably gives the bulls an advantage, but until we see that, we'll probably be selling into that going forward. Now, moving over to the livestock side of things, we've got June live cattle pulled up here, and we've been consolidating. It isn't what the bulls wanted to see, but it's better than continuing to sell off. We're just kind of right in the middle of the range, and this 117 and a half level has been pretty significant really since the start of the year. This was previous resistance back in January and where we broke out of. That resistance became support, and then the secondary breakdown point in April. Now we're just lingering around here in a little bit of a wedge formation, looking for either a breakout or a breakdown. The cash market hasn't really done us any favors. I think we need to see the kills really ramp up to chew through some of these cattle to really get the cash price moving in the right direction for the bulls. Also keep in mind that we do have a cattle on feed report on Friday, so wouldn't be surprised to see some continued consolidation into that report. Maybe that report is what gives us or what sparks that next bigger directional move. We are pretty friendly on the live cattle market from these levels, but again, we're looking a little bit further out. June, you're kind of running against the shot clock, so we've been playing it out to August, October, and December. If you've got any questions about how we're playing that, futures and options, give us a call. Lastly, wrapping things up with the lean hog market, June lean hogs here. Held trendline support early in the week, which is encouraging to see. And this was not only trendline support, but we also held some big levels going all the way back to April. This was the old kind of contract high, and then the secondary breakout point and gap. And now we're just kind of treading water in here. If the bulls can't really get consecutive closes back above this pocket, 111 on the top end, we don't mind trying to take a stab on the short side, but ideally want to see a break and close below trendline support, and this old resistance level is a confirmation of a near-term top. So those are the levels that we're keeping a very close eye on. Again, any questions at all, feel free to give us a call. Send me an email, oliver@bluelinefutures.com. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.